Hello, everyone. Welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the markets have been doing and are likely to do. Before we start, wish all the viewers a very happy 2025. May this year bring lots of prosperity and good health to you guys. Let's begin with our analysis of Nifty. So that's a monthly chart. So monthly, definitely there has been a sort of a top that has been created at 26,300, from where we have come down about nearly 3,000 points. Looks like markets might move towards this area of demand zone on the monthly chart eventually. That's the monthly demand zone where there is a good likelihood of a turning point in the markets for a nice swing setup. Right now, the markets are moving down, and if they break 23,300, 23,200, we could see a slide towards at least 22,500. So it's a sell-on market. Last month, it went up all the way towards nearly 25,000 and then got thrashed. Again, today we got sold off. In the morning, we have this HPMV scare. So be cautious about longs. You can wait for new investments and new long trades. Look at good shorts at good supply zones till we get some good confirmation on the daily chart, at least. So on the monthly, that's the area of supply zone, which will still act as a supply for the market. So around, let's say, 25,000 to 22,000 is going to be your entire monthly range once we break 23,200 and close below it. On the weekly chart, after that strong move into this area of supply zone, which is holding the prices down, that's also a very good supply. If we come back again here, it could be a good short on confirmation. Right now, we are trading in this area of demand zone, and prices are likely to retest the pre-election levels, pre and post-election levels here. If we start moving below 23,400, we could see a quick slide towards 23,200. That's what I guess will be the target for this week. And on the upside, we might again move towards 24,000. So in this week, we could be ranging between, let's say, 24,200 to 23,200. Till either side is broken, we will continue ranging between these areas. And on the weekly, we are seeing a good bearish trend developing. And if you break this, it will again mean that prices can easily move towards, let's say, 21,500, 22,000, that area where the next areas of demand zone are. So any swing longs or FNO longs should be avoided, and you can look at bear call spreads once we come back again here, or getting into maybe hedge shorts for higher targets once we give a good pullback. On the daily chart, that's the area of supply zone from where we again came back. We have still not broken the last week's low. We're yet to break this low. If we break this low, we still have this demand zone and the pro gap, which went straight to this supply. But since the origin of that demand zone is all the way here, and it has been tested pretty deep in the last fall, there are chances once we start going out, or if we have an outside gap, which I don't know whether it will be there, or maybe an inside gap to a 75-minute supply and then pull down. Once we break 23,200, there could be a quick move on breach of 23,200 towards, let's say, 22,900 or 23,000. So avoid longs till we get some confirmation in these areas, and that would be your target. So the overall range would be, let's say, around 24,200 to 23,200 as of now for this week and next week, until either sides get breached. On the 75-minute chart, which is the intraday time frame, we are back to this area of demand. In fact, we just pierced a little bit lower. So this is the main demand zone. Sorry, this is the main demand zone, which probably can potentially hold the markets. But remember one thing, we did not go too high, and we are coming back again. So there is a good chance that we might even breach this if the selling pressure increases, or we see negative global cues. If you are shorts, these could be your targets around 23,300, 23,400. You can book your shorts and wait for confirmations for long, and can use spreads on the call side, pair call spread to pocket the premium. I would avoid doing bull put spreads because the trend is down and markets can fiercely come down all the way here. So be cautious about longs and short puts. And you can look at sell on rise once we again come back towards 24,200. All right. So slightly bearish, and we might continue moving down at least. Let's say for the next 2 weeks, markets could be under pressure unless we get some good confirmations. A quick look at India VIX. India VIX is moving up nicely. So that's the area which it has been holding. And on the monthly, if you see, let me just remove this. So on the monthly, we can move up till 17. Similarly, on the weekly, so there is a good chance India VIX can move towards beyond 17 to 18, and that could drag markets down to 23,200, 23,000. And on the lower side, that's the area of demand. So if you see for the last so many months, like let's say from October, we haven't really closed below 13. So volatility is going to remain high, and it might continue to remain high for the next couple of weeks and probably even after budget till budget because there are many events lined up. So be cautious. Also, crude is moving up, which is not a good sign from an inflation perspective. So expect volatility to remain on the higher side. A quick look at Bank Nifty today. Bank Nifty has been one of the top. I mean, it has cracked down more than 1,000 points, 2% today, along with auto indices. Uh, That's the area from where we are coming down, and this is the area of demand zone on the monthly chart. Prices will at least make an attempt to move towards, let's say, from a swing perspective, over towards 48,300 on the monthly. We need to see. If you take a look at these areas at this 49,700, prices have always moved up for the last 6 months from these areas and gone up again towards 53,000. So you got to be cautious, avoid going long and short till we get some confirmations on smaller time frame. Good chances of markets pulling back towards 48,000 in the next few weeks, or maybe by Feb end, or maybe you can even see that happening in Jan if the selling continues. On the weekly, that's the main supply which is holding up Bank Nifty. From there, we again had a big fall. Now, if you take a look at it, this is where we came down. We went up, failed to give a new high, and are back at these areas. So there is a good chance that we might see a little bit deeper move in Bank Nifty towards, let's say, 49,500 to 49,700 before we might get some meaningful pullback. Or if the trend continues, we could see a strong move towards 49,000. So as of now, this is the area of demand zone. We are a little low on the curve, but the trend is against us. So longs should be only on confirmations, or let's say at key areas of demand zone. And if this breaks, this will be a good supply where we can again look at reshorting for a nice target of 47, but that will take a longer duration. So on the weekly, we are low on the curve, but at tested demand zones where again we have probably have chance to make a new low. That's the daily demand zone. So if you take a look at it, every time prices have come here, we have moved up. So again, there is a chance of moving up, but maybe even if it could move down a little bit towards 49,500 and then move up. Then also, based on the daily chart, we'll have a good ROI, RR, if we get to buy around 49,500, where there could be a turn that might happen all the way till 51,500. So that's going to be our range for now in Bank Nifty. So let's say that's the area, or the supply will be on smaller time frames and around 49,500. Once we break 48 800, then Bank Nifty has another 1500, at least 1500 points free fall, which we could see. Now, this is the result season, so you will see volatility increases, you will see sharp pullbacks. Be cautious about your FNO trades, and cash entries can wait till these events are over. On the 75 minute, that is the intraday time frame, we have a new supply here, and that's a main supply. So 50 to 200 on the higher side, and 49 700 to 500 on the lower side. We are again at these areas of demand zone on the 75-minute chart. There's a very short demand zone, and the next demand zone probably you might want to see is all the way here at 59 400. So the momentum could push prices down further if we fail to hold a 59 700. And if 59 700 closes, we could see another 300 400 points quick move down in Bank Nifty towards 49 300. So bearish outlook. Once it comes here, we can look at some smaller time frame confirmation shorts between these areas. This will be very good shorts between 50 to 200 to 50 to 3000. That will be the turning point again if it goes up. And on the lower side, maybe markets could turn from here as a relief rally towards, let's say, at least 5500. So more of waiting for pullbacks to get into shorts, and for longs, we need good confirmation. So avoid aggressive longs. The momentum and trend is towards the downside. So don't fight the trend. Right? Hope that helps. Keep a look at the individual stocks, especially stocks like HDFC, ICICI, Kotak, SBI. They will drive Bank Nifty because they hold the maximum weightage. All right, hope that helps. So cautious approach, a bearish outlook. We are low on the curve to really get into shorts now. You can probably play some spreads. And for longs, we need good confirmation. Though once we get the confirmation, we could have good reward to risk on the long side. Hope that helps.